Hey everybody, welcome to the channel, and I'm so excited to have you. If you're new to trading or if you've been trading for a long time, this video will help you. If you're new to the strat or maybe you're struggling with the strat, this video will help you. Doesn't matter if you know the strat or not, but I highly suggest you do because we trade what we know to be true about price action. We'll reference it a little bit here. I do have a continuity video that's going to be referenced a little bit in this video. I'll make sure to link it up in here in the top corner for you guys. But without further ado, what are we talking about? We are talking about position management. This is the key to trading. This is the holy grail. Everyone always says risk management's the holy grail, right? And that's true, but they don't teach it the correct way. And the reason we can say that without a shadow of a doubt is because what we know to be true about how price works. So what we know is green gets greener and red gets redder. What does that mean? It means if this month is going to close up 5%, it must go 2% first. It must go 1% first, right? So if you create a position in here in the beginning of the month and it's up a couple percent, it's more probable that if you hold that position, you will continue to make more money. As the month is still open, it's still green, and since it's above the open, the buyers are taking the offer because price will aggregate on the offer or on the bid, and that is picked up by the color of these participation groups. If that sounds confusing, go watch it. I'm going to put it in the top corner right now. Go watch that video and then come back. That being said, though, what do we then look to do? Well, we want to trade in the direction of 3 or more participation groups. Ideally, we want 4. If you watch that video, it all makes sense. But that being said, this week, the week is green. The day went 2 up, 2 up, 2 up this week. So we got 2 up going buy, 2 up, it's a buy, 2 up, that's a buy. So we know we're buying, right? And then we want to create positions in here. So when we look to create positions, the first thing we want to understand is how cost basis works. So if you have, let's say, 100 shares at 520 on SPY here, and then price moves $1, or let's just say moves $5 in your favor. So you have 100 shares, it's $5 in your favor, you're now plus $500. So up here, you're plus 500 on your whole position, right? Now, position management is simply increasing or decreasing your position size or moving where your stop losses is. So what we want to do is, let's say trades up here, we'll just say it's a 60-minute candle. The next 60 opens, it goes 2 up and then red. Right here, we're plus 500. So at that point, what we want to do is reduce our position by half. So if we have 100 shares down at 520, it goes to 525, reduce our position by half. So it's going to look like this, something along those lines, depending on what your entry was, something like that, right? We reduce by half, and now we have on our open P&L, we are plus 250 on the open P&L of the current position because we now have 50 shares and they're up $5 a piece. On our closed P&L, we are plus 250. Okay? So if this were to come back down all the way to our entry price, at that point, this is now 0, right? So this is nothing, but we're still up 250. So what does that mean? Instead of your break even being at where you had entered, your break even goes $5 below your entry. That's the key, because now people who say, oh, I bought it and then it went and then it stopped me out and then it kept going. This is the solution. Take half of that position off when you have reversal against you or reason to do so, such as a failed 2 against your trade. Take half of it off. Move your stop below your entry price or below anywhere you want to manage risk to. So let's say we played today, put our stop at low a day, make sure we have a winning position there, right? Let's say we want to be long this week. Well, if you played Monday, you could have definitely made an open position in here and then took half or maybe 70% off in a CPI and had a stop below Monday's open, or Monday's low, I mean. Okay? So you can manage your risk to the low of the week, to the open of the week, to the low of the day, whatever you want. And this is where the freedom to create winning positions and let them work comes from. So if you've been trading the strat and you're like, I'm just doing this and I do create some winning positions, but then like they may stop me out. Some of them really go, but those are the ones I don't hold on to. This solves all of it, because once you have their money, once you make that $500 trade and you put $250 in your bank account or in your trading account, now you're free to mess with the other 250 because it's not yours, right? And you can even risk the 250 you just took because that's also not yours. You just made it on that trade. So when we do this, then we can do whatever we want. We could be short, we can be long, we could be both. We can do whatever we want. So when it comes to, for example, the trades yesterday on Tuesday, During Stat Trading's live stream in the morning, we mentioned the 3-2 hammer actionable signal on the 15er, and we bought it in here. And you'll notice it goes 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, and then the first reversal against we'll just say is here. So at that point, we're up $1.59. If you're trading options, it's probably delta 0.8. Maybe you take 5 options contracts. Maybe you're up $1,000 something at that point. Okay, so take off half of it, or don't take off any if you think it's still going to keep going, which in this case it kept going, and we were kind of thinking that was going to be the case. But let's just say you take off half. At that point, you can manage your risk to the low of Monday's range, because this is not going to be more than the $1.50 or whatever you made here, right? Especially if you take off 60, 70%. So you're in this winning position, and you can now hold it. And we can then say, if the week goes to its magnitude, we're in, right? We can manage our risk way down here. So create the winning position and then let it go. The next thing you want to understand is we can add to winning positions. So not only can we buy this 3-2 on the 15-minute, we can buy and add to winning positions, risking their money on the 3-2-30 right here. And we can manage our risk then to the low of this 30-minute candle. So we're risking 39 cents of their money. Maybe we double our position size. And then once the 30 reverses up here, now we're up $2 there. Maybe our cost basis is somewhere down in here, right? Somewhere down in here around like 286 or 286. So maybe we're up $300 on 100 shares. Maybe you have 1,000 shares and you're up 3,000. Then once this reverses, take half off. So be it. And then if it reverses back up again, add back with more. Once it goes 2 up in red here, take half off. Move your stop down into this stuff. And you can just continue to add and add and add and create bigger and bigger positions. And if you're not a stratter, this sounds stupid because you're like, I don't know where price is going. But if you're a stratter, you're like, well, this week magnitudes to 554.87. We have all week to buy this thing and create winning positions as long as the day is green and 2 up, or as long as we have a 60 signal that confirms that, whatever your strategy may be as far as entries are concerned. So create the position, let it work, right? And now, since you have this I guess fundamental understanding of how price action works with the strat and how we manage positions, go and do this across as many things as possible, because this will make you money. Because if you're in winning positions and you take your half off or whatever you're doing and you let it go, the ones that stop you out are the losers, but you didn't lose your money doing that, right? And then the ones that keep going, you let them keep going, and you're smiling the whole time all the way to the bank because you're not risking your money. The casino is open. So I hope this is enlightening, and this is like so important. This is gonna be a very short video. This is about all I got for you, but please do this in your trading. And the same thing could have happened today, right here. The 3-2 hammer right in there, boom, take it up, 2 up in red, take half off. Your cost basis is now the low of this 3 pretty much. Then when it goes 3 down in green, boom, add back to it right here. When it goes hammer up, add back. 2, 2, 2, maybe it goes 2 down, you're reduced by half again. Goes hammer up right here, boom, double your position size again. Now it's inside in red, you just let it do its thing, right? So this frees you up. I hope you guys enjoyed the video, and if you want any other videos or any other topics covered, please drop them in the comments below. I will have a video talking about actionable signals coming out pretty soon, so look out for that. But I'll see you guys in tonight's nightly video where we talk about what we did today and what we got going into tomorrow. So adios, and have a great rest of your day, guys.